values have plunged. So people before who could maybe refinance or buy, they just don't have the equity or they don't have the down payment.
That's correct. And until they stem, again, the foreclosure tide, that's not going to stop. And, you know, it's nice now that interest rates are low. That's not going to be there forever. So I think, you know, if you have a chance to refinance, now's the time to do it. Yeah,
I mean, we agree. I think, Doug, you agree with us on this one, is that interest rates, what goes down must come up.
Oh, it'll absolutely go up eventually when things get rolling back in the economy and everything. But you have an opportunity here if you see something that you like and the price is right and you can qualify. There are a lot of people out there that would like to buy and probably should buy, but they're all taking a wait-and-see approach as if it's going to get a little bit better. They want to wait till it gets a little bit better. At some point, you know, if you see a good price and you see a good interest rate, you do it if it's your long-term home.
Yeah. Wasn't it just yesterday that the internet stocks were going to double every 14 nanoseconds? You know, that the real estate market, you'd make 30% before you sign the closing documents.
Right.
These are historically low interest rates. It's a breach of logic, I think, not to sign the documents now and refinance your loan while you can, because the United States spends 80% of what the rest of the world spends. I mean, spends 80% of what the rest of the world saves. And foreigners now are saying, wait a minute, why am I lending you so much money? And China actually said that we can't expect to get cheap foreign credit that's unlimited.
Right.
Cheap. That means interest rates may go up.
And that is, translation, interest rates are going to go up eventually. All right, let's go now to Montana, where Doug is on the money line. Doug, what's on your mind?
Hi, Carmen. Yes, I'm currently in the process of refinancing. I'm all approved with the bank. My wife and I's credit score ranges from 704 to 732. And we are currently just watching the interest rate, trying to decide what to lock in on. I missed out on 4.5 to 4.8 back in the beginning of January, and as soon as right after the inauguration, the rates seemed to jump up to about 5.25, and they're kind of hovering there. So I'm just wondering if you could speculate based on the stimulus package for those of us trying to refinance if it'll get back down below 5.
Oh, Doug, we love you, but speculate is a word that we dislike greatly here. Greg McBride, I mean, your site tracks these rates every single minute of every day. What say you to Doug here?
Well, I mean, you know, even though the government's committed to lower mortgage rates, you could very easily make an argument the other way that rates will go up because of all this money that the government is printing. If I were in Doug's shoes, I wouldn't gamble because with his credit score, he's facing fees that are an add-on to that rate. So even if rates do drop, it's not a guarantee he's going to get that 4.8% because his credit score isn't high enough to lock in that very best rate. Yeah,
and Greg, we saw some of the rates fluctuating too. They went back up, they went back down for a couple of weeks, they went back up. So to the point of, you know, this is a 30-year product. So we need to not think of increments, right, Doug?
Yeah, Doug, you're trying to time it. It's like trying to pick an ideal time to buy a stock. You know, do you wait a minute, it'll go down a little bit lower? Do you wait? At some point, you're in the range here. You're not going to be far off if you do it. So I don't think, you know, part of it is moving forward. Get the ball rolling, get it started, get in there, and start locking that in. Because the process, even if you do it tomorrow, doesn't mean you're going to close tomorrow. It takes some time.
Right, it takes some time. So,
and again, as Greg mentioned, we've increased the money supply, right? We've increased the money supply by 70% in the last 8 years. And so here's the fundamental principle. Risk is always in proportion to return. So what's the risk? That you get an interest rate at 5.25%, that it goes up, actually, right? So now you might be paying 6%. The return isn't worth it. So I would actually refinance right now.
Yeah, and it's true. To your point, is that when you see a rate, Greg, like on your site, you see the rate that's there today. You go to your lender and say, here's the rate that I want. That doesn't necessarily mean that you can lock that in because the whole process will take at least 30 days.
Absolutely, and rates fluctuate on a daily basis, so it's really hard to say where a rate's going to be 30 days from now. If the money's on the table, grab it, lock it in while it's affordable because you don't want that rate to move against you.
Doug, do it tomorrow morning. Want to see you there. Let us know how it goes. Time to head to California where Vic is standing by. Vic, what's going on?
I have a question. I'm currently trying to refi. I have a first at 30 years at 5.8. I have a second at 8%. Both rates are fixed. But my lender says that I don't have the 80% loan-to-value ratio. Can I refi my first only at a better rate and for a shorter term?
Well, you know what? You may be able to. That may not be what you want to do. Greg?
Yeah, the problem here that even refinancing that first might not be a slam dunk because lenders in that second lien position are increasingly reluctant to do what's called resubordinate. They may actually roadblock his ability to refinance that first mortgage.
Yeah, and Vic, question to you. Do you have some equity, like the 20%, in equity in your home?
Yes, I do.
You do. So it is that second loan. I mean, this is the trouble. He's kind of stuck.
I've seen clients that are in this circumstance exactly, and they'd like to get someone to take over the first mortgage, but the second loan is in the way. I think, well, first of all, 8% seems kind of high to have a second loan. What I would recommend, first and foremost, if you have the extra money to put down extra each month towards refinancing, you might just pummel that money onto the second loan, get rid of that, and then when you have all the equity just left on your primary mortgage, you can look to refinance. But that's the way I would go with it, I think, at this point.
And Vic, your interest rate now is on the major loan is
875.
Yeah, so it's the 8% here that's really getting to
the
him.
5.875. I would pay the minimum amount you need to there, put every waking dollar and every extra dollar onto the second one until it's gone. Then you have that extra cash you can put towards a refi or towards the first if you want.
Yeah, Ivory, that 8% is really high.
It's very high. Now, is that a line of credit or is that a home equity loan with fixed terms?
I think it's a fixed rate at 8%.
Both rates are fixed.
Both rates are fixed. Yeah.
Could you refinance that second loan?
I haven't attempted to do that yet.
See, part of the problem is that you're in California, and California's been especially.
You can't move the house. You can't.
I love Venice Beach, but if I had a house there, I'd be a little concerned because the unemployment rate in California is very high. The property values have gone down. That's affecting some of your value as well.
Yeah, this is a good example of how the bigger picture really affects you at home.
There's nothing wrong with 5.875. I mean, you
No, it's that 8%.
Right, so focus on that.
All right, thank you so much, Vic. Adam in New Jersey. Adam, what's going on?
Hey, Carmen, great to be here. Over the weekend, I heard a story on the news about a mortgage product called either an ARC mortgage or an ARCH mortgage, and basically, it kind of works like an ARM. If mortgage rates go lower, then you get put into the next lower rate, but you're protected on the upside. So if rates go up, your mortgage is not readjusted. Do you know anything about this and who offers this product?
Adam, I think were you listening to a commercial? That was a commercial.
No.
You sure? Here's the danger. Anything like that, Greg McBride, help me out here. Any of these products, anything with the word adjustable in it, if this economy and this housing market doesn't show you just what a mess that can make of your life, I don't know. What does?
Yeah, well, and what concerns me is that the trade-off he's likely to face, and I'm not familiar with this product, but you know, the trade-off he's very likely to face is that if he's going to get the benefit of downside if rates drop, but not the upside if rates rise, his initial interest rate is probably going to be higher than a traditional fixed-rate mortgage, where the lender's bearing all of the interest rate risk. So I would argue for look at a traditional fixed-rate mortgage. That's really where the value is in today's market.
Adam, this falls under too good to be true, my friend. Fix and lock in an interest rate today. Thank you so much, Greg McBride.